The company I'm looking at this week reported their strongest ever half-year revenue performance this week. Their shares shot up by 11% against a larger, wider market sell-off. They are a small cap software sensing company based in Oxford whose clients include BMW, Epic Games and NASA. The thing is, can the growth continue and are they good value? Let's have a look. The company is Oxford Metric Group, or OMG ticker. That's a good ticker, isn't it? So in the last, since 2015, their share price has had a good uptrend. Look at this, pretty much above the 200-day moving average for most of the way, dipping down again, but 380% over the last 7 years, and it's down to around about 22% since the high, which was around about the start of 2022. So we're in a bit of a range here, okay? So what do? Let's have a look, shall we? It's a fancy website. Smart sensing technology. So you see they put all these little bits on these athletes for everything from 1984 they started off in, but looking at athletes' performance, life sciences, used by Guy's, St Thomas's Hospital, Imperial College London, Harvard University, Boeing, Airbus, Ford, BMW, and NASA use them. And entertainment, Industrial Light and Magic, Epic Games, EA Sports, Framestore, some big companies. So when you see these, human characters digitized and put in a virtual world, they could be using Oxford Metrics technology. There's a lot going on here. Virtual reality, Dreamscape Immersive, Electric Game Box, Sandbox VR, some of the clients there. So very impressive. And you can get a story here from 1984. And they go through all their evolution as a high-tech company. It's nice to see a tech company like this based in the UK being used by massive companies around the world. So the interim results, like I said, they said their interim results 6 months ended the 31st of March, strongest ever half-year revenue performance, healthy order book provides confidence for the second half, investing organically whilst actively pursuing the right acquisitions, well placed to deliver full year performance above current market expectations. And look at the gap up here. This is when they released that trading update. In fact, it went up to, it opened here pretty much, or the day before, it was 97 pence, pretty much 97.5 pence. And the day they released that, because 7 a.m. RNS comes out, then 8 a.m. and the market opens, it gapped up to over 102 from 98. Then went up to 113, where it hit the ceiling and came back down. So the trading range of the day was quite large, but the open and close there, it didn't, open a lot more, but it did gap up there. But it's come back down, of course, below that gap. So it may fill the gap. So this may be an opportunity, and I'll show you why. So let's look at the spreadsheet, okay? Just a reminder, this is 6 months, this side, on the right side here, to the 31st of March, the metrics here. And this is for the year to the 30th of September. That's their year end, okay? So first and foremost, let's look at the price at 102. They are 132 million market cap. Enterprise value is 121. It's in green. That means it's good. They got more cash than debt. Have they got any debt? We'll have a look now. Net asset value, not far off. Average daily volume is not huge, but it's 230 grand a day, pretty much. Revenue for the half year of 21 million. Now, if you look across to the full year, it's not far off that. So you can see the very impressive growth. Operating profit of 3.38, cash 11.6, no debt. So a decent lot of cash and no debt. That's always nice to see. Operating cash flow is at 379. So it's gone down from there. It's not half of that, is it? So maybe there's spending a bit more. Free cash flow is better though, so that's gone up. Dividend of almost 2%. Covered by 1.3 times. So let's look at this growth, value, health, efficiency, momentum, and forecasts. So growth-wise, 70% top line, top score. Now, operating profit growth, 433% compared to the interims last year. Net profit growth at 290%. Operating cash flow went down by 88%. Free cash flow, 129% growth there. Now, value, it's not looking as good as growth. Price to sales 3.12, PE of 20, but it's improved from the years. 39 there for the full year. So they continue this for the second half, and they say they're confident. Then that could come at 20 or even below. Price to book, not too bad. EBITDA, again, that's good. Price to free cash flow, it's a bit high. Health-wise, they're a net decrease in cash, but nevertheless, they've got a healthy cash position. So you've gone down from 12.6 last year to 11.6 here. No debt, there's no worry about that. Current ratio, very healthy. Their current assets cover their current liabilities by over 8 times. And even the quick ratio, their cash alone covers their current liabilities by 1.3 times almost. That's a high bar to achieve on the health side, so it's very good. Efficiency, how are their margins? Gross margins good, operating margins good, net margins good. Free cash flow and return on capital are okay. Nothing to worry about. In double digits, it's not too bad, but it's okay. So let's look at the momentum on the chart. In fact, let's go to the chart here. And we can see momentum is quite good here on the moving averages, but not on the crossovers. So we can see here, let's zoom in to the chart. We can see the RSI shot right up here on that momentum, but we can see it is above the moving averages, 50 and 200. But let me just take these out to make it a bit clearer. But we've had a rollover here, as you can see. With a nice upward trend. Like I said, going back to 2015, it dipped over here in 2020, and we got the golden cross here again, which rose. Even if you invested on the break of the 200-day moving average, to 89 there, up to there, and you're at we got 111. But then we crossed over down here, and now we're seeing a bit of congestion. We're hitting ranges, and in fact, if you look at the price action here, it did get above. Oh, did it? Hang on, quite telling here, it didn't. So the second time at my bald head's in the way. So literally at 127 last time, that was the high in February 2020, and it didn't quite do it. The high there was 127, just below that. So it closed just below that. So that's a lower high. I know it's quite tenuous there, but then we see the weakness selling off. The fact it didn't blow past that previous high shows some weakness. And all of a sudden we sold off and came right down a 50-day mover in, bounced off that, 200-day, and again it crosses down, and we got the death cross here. So we're seeing a little bit of recent. Again, we can see this line here, which find it very hard to get above this previous high, which is 115 a couple of times. Even now on that excellent, the best ever half-year trading update, it didn't get up to that 115 previous high. So we may see some further weakness here unless we consolidate going forward. Okay, let's look at the forecasts. Okay, so here are the forecasts as per brokers. I mean, the 2020, 35%. They're seeing top line growth here for 2023, but they're only seeing 7% for 2024. There's no figures for 2025, so I've just replicated that and used the similar margins. Their margins improving a little bit. Okay, but these are the returns you expect to get based on revenue growth of 35%, 7%, 7%, and margins of 20, EBITDA 13, pre-tax profit, and post-tax of 13. Then multiples of 5 times sales, quite high. EBITDA of 20 and post-tax 30. They're quite high multiples. You're going to achieve returns of around about this level, 20%. And even over the next couple of years, I see a 135 target maybe. Who knows? If they grow faster, of course, then that could get higher. The broker, it's not Liberum, by the way, ignore that. But the broker is, I think it's Progressive. Got a target of 115, or 150, so it's a bit above mine, and that's a 40% upside. So growth is good, but value, they're quite, highly priced. But I say the brands they have and the clients they've got, maybe it should be. But nevertheless, it's not cheap. So they're going to have to keep knocking out of the park. Let's have a look at, strong buy there. I said 140 is the broker target there, so that's upside of 37%. And here's a summary. So very good numbers here. These are percentage scores, by the way. 80% growth, value 47, health 80, efficiency 80, momentum is a bit low, 64, forecast 65. Of course, the forecasts are a bit low because the value is a little bit questionable. It's highly priced. So how much upside is there? But overall, 69%, it's in the green. So good figures. Like I said, the only thing that's questionable is the return at this level.